Hi, this is group presentation of group number 14. My name is Bijayata, student number TIA 3021. So in this presentation and in this assignment, we are talking about the jurors taking advices regarding taking over a business unit, which will help him to decide on the purchase of the given unit. So first thing we need to know about the financial statement, and the financial statement are the statement that give an overall picture of the financial position of a company. Balance sheet, profit and loss statement, as well as cash flow statement are a major part of the financial statement, which tell about the position of a company, whether a company is profit making or loss making. As Mr. George is planning to purchase a business unit and wants some answer to his questions, the most important decision while purchasing a business is the structure of the business. It refers to the legal provision applicable to business, rights and the obligations, amount of ownership, liability, rights, and the lifespan of a business. All these factors are to be considered before the purchase of any business. While there are three major business forms which can be considered as an option for purchase, and also it has got advantages and disadvantages. There are two forms of business. One is sole trader and the second one is partnership. Sole trader is one of the easiest form of business. Only one person is responsible for all the profits and the losses in the business, while partnership required two or more persons to start a business. A partnership deed is prepared which lays down all the rules to be followed, like profit sharing ratio, interest liability, and so on. They have got both advantages and disadvantages. We can see both advantage and disadvantage in the screen. For example, for the form of business, this is one person business requiring limited capital where ownership resides with one person is the advantage, and the disadvantage is the liability of the owner is unlimited and there is restriction on funds. Whereas for partnership, the advantage is all partners are equal liable for losses in the business, and the fundraising is easy. Whereas for disadvantage, profit are to be shared among the partners, which might increase the risk of conflict in business. According to the Australian Accounting Standard Board, goodwill is an intangible asset arising during the acquisition of a business. Goodwill is the reputation of a business. So in accounting terms, it is the excess amount paid by the acquirer of business over and above its net assets, contingent liabilities and purchased Goodwill is a non-current asset appearing in the balance sheet of the company. So it is also the industry specific and can be important for the online application like WhatsApp and Facebook.
Thank you, Vijay, for your presentation. Hi, I'm Gautam Guru. My student ID is EMV80926 and I will be covering the rest of the presentation. So the topic for the first slide of mine is assessment of business worth. The worth of a business is its current worth. Evaluating all aspects of the business. It is calculated when a company is willing to sell its business. Is the price that the acquirer company will be willing to pay. So the most common method to calculate business worth is from its balance sheet. The excess of assets over its liabilities is the worth of a business. In this case, assets of the company is worth $1 million and its liabilities is $600,000. So the worth of the business is $400,000. This is the one method of calculating the worth of a business. However, there are other factors also which are to be considered, like the income statement of a business, the revenue that the company is generating, its expenses, the profit that company is making during a tax period. In this case, the company has not accounted for bad debt expenses and downward valuation of inventory. These two factors will reduce the assets of company and its business worth will be less than $400,000. The next topic of mine is valuation of account receivable and inventory. Account receivable and inventory are the two most important aspects while acquiring a company. The best valuation method is to recognize them at net realizable value. That is the value which it will fetch in the market when the business will be sold. In the case given, the company has accounted for the assets at gross amount and cost, which is not a feasible method. In conclusion, there are several factors and they should be analyzed properly for an effective financial decision. Overall, case study shows different forms of business organizations and it also tells us about how an individual have to make a choice considering several factors, for instance, purchase consideration, revaluation of accounts, and financial decisions. That's the end of our presentations, and these are the references we use to prepare these presentations. Thank you.